Welcome to Daily Crypto, episode 28. Today we're diving deep into the constantly shifting landscape of cryptocurrency. Our mission in this deep dive is, well, to really distill the most vital information, reveal some surprising facts perhaps, and connect the dots across all these different developments. We want to help you cut through the noise and feel truly informed about what's actually happening right now. Okay, so to kick things off, let's take the immediate temperature of the crypto markets. We're seeing some interesting shifts playing out kind of as we speak. What's the daily pulse telling us?
Well, what's fascinating here, I think, is the truly mixed picture you get when you look closely. You see the major players versus some of the more speculative assets, and it's quite different. While the established giants, Bitcoin, Ethereum, they're experiencing slight dips.
Okay.
Others are holding remarkably steady or even gaining some ground. For instance, Bitcoin is currently hovering around, let's see, $104,995. It's showing a minor decrease, about 0.5%. Ethereum, the second largest, it's also down slightly at approximately $2,525.76. BNB and Solana, they're following a similar trend, sitting at $645.92 and $146.61, respectively, both with small dips. So this kind of general trend for the tot coins, it suggests a moment of maybe slight caution, or perhaps consolidation in the broader market.
So the big players are mostly in the red, but just barely, it sounds like. Is there anything moving against that slight current? Anything pushing upward?
Absolutely. And what's interesting isn't just, say, XRP's slight uptick at $2.70. It's a pretty modest gain, just under 0.1%. But it's how it contrasts so sharply with the performance of the meme coins.
Ah, the meme coins. Right.
While the established coins might be facing a slight headwind, let's call it the more speculative end of the market is actually finding significant momentum. Shiba Inu is down a little at 0.0000011114.
Yeah.
But look at Pepe, it's up over 1% at a C.0000144.
Okay.
Bonk is up nearly 1.4% at 0.000144. Dogwafat has seen a really notable gain, over 2.2% at 0.807337. And Popcat is up almost 2% at 0.303551.
Quite the difference.
It's almost like two different narratives are playing out simultaneously, isn't it? You've got this sort of institutional caution, maybe, versus a resurgence of retail speculation, a real willingness to embrace those higher risk, potentially higher reward assets. This bifurcation, it speaks volumes, I think, about the diverse sentiments within the market right now.
That really is a striking contrast. Okay, so moving beyond these daily price movements, which, let's face it, can often feel like just noise, what's really driving the tectonic shifts in crypto right now? What are we seeing on the regulatory and institutional fronts that truly sets the stage for the future of this space?
And that raises an absolutely critical question about mainstream adoption. You've really hit on the core of it. We're observing some significant regulatory developments and institutional commitments that are fundamentally reshaping how crypto is perceived and, well, how it's used. The passage of the Genius Act is, frankly, a colossal headline.
The Genius Act. Right. Break that down a bit.
So for context, the Genius Act, it stands for Greater Enabling Investment in U.S. Stablecoins Act. It's specifically designed to establish clear regulatory guidelines for stablecoins. And this isn't just about unlocking capital, though that's huge. It's about providing that regulatory clarity
Yeah.
that large, risk-averse institutions have really been waiting for. It effectively turns crypto, or at least stablecoins, from a purely speculative asset maybe into a legitimate governable financial instrument in their portfolios.
Yeah.
And we've seen immediate impacts. Look at Circle Stock. It surged an incredible 34% to a new record high of $200.
Wow.
That represents a staggering 500% increase from its IPO. So experts aren't really exaggerating when they say this act could unleash trillions in institutional crypto capital.
Trillions. That's just,
Yeah.
it's a mind-boggling number. And what are the direct practical implications of a landmark piece of legislation like this? How might we see crypto integrated into our everyday financial lives because of it?
Well, a very direct and potentially impactful consequence, according to the Alchemy CTO, is this prediction that every bank will issue a stablecoin.
Every bank. Really?
That's the prediction. And it's not just theoretical talk. We're already seeing tangible steps in this direction. Coinbase Derivatives, a significant player in the crypto derivatives market, right? They're adopting USDC, a major stablecoin, as collateral for U.S. futures trading.
Okay, that's a big step.
It's a very clear move towards integrating stablecoins into traditional finance mechanisms. Think about it. Using a digital dollar as collateral for complex financial instruments, that signals a profound level of trust and functionality. And furthermore, you have OpenPaid, which is a global payments and banking solutions provider. They've partnered with Circle, the issuer of USDC, to deliver unified fiat and stablecoin infrastructure. This partnership aims to bridge that gap, between traditional banking and the crypto ecosystem. It allows businesses to manage both fiat and stablecoin transactions seamlessly. These are really foundational shifts, making stablecoins potentially a backbone of future financial services.
That's a really powerful signal of integration. Okay, so with stablecoins seemingly on this path to widespread adoption,
Hmm.
what about Bitcoin? Are institutional giants still bullish on the original cryptocurrency, or is their focus maybe shifting towards these stablecoins and platforms?
No, on the Bitcoin front, institutional interest remains remarkably robust. It really defies any notions of fading enthusiasm.
Hmm.
Just look at BlackRock, one of
Yeah.
the world's largest asset managers, right? And they bought a staggering $1.4 billion worth of Bitcoin over just a 6-day streak.
$1.5 billion almost. Wow.
Yeah, and this isn't just a speculative punt. It feels like a strategic allocation by a titan of traditional finance. Similarly, Europe's first Bitcoin treasury, that's a fund specifically designed to hold Bitcoin for institutional investors, added nearly $20 million to its holdings. And in Norway, K33, a leading crypto investment firm, is even issuing shares specifically to purchase 1,000 BTC. Even established financial players like Goldman Sachs are now actively betting on Bitcoin ETFs, which of course provides a much more accessible way for their clients to get exposure to Bitcoin within those regulated frameworks. And what's more, Bitcoin's price has shown some impressive stability, even as the Federal Reserve has kept interest rates stable. That suggests a growing resilience against broader economic shifts, likely due, at least in part, to this increased institutional backing and its perception as a legitimate asset class. It's pretty clear institutional confidence in Bitcoin, whether as a long-term store of value or a strategic investment, seems stronger than ever.
That is a lot of positive momentum. It really indicates a maturing market and increased confidence, as you say. But we know the crypto space isn't without its significant challenges. While adoption and institutional interest grow, what about the security incidents and the legal battles that recently made headlines? We can't just ignore the inherent risks involved here.
Indeed. And vigilance remains absolutely key. If we connect this to the bigger picture, these persistent challenges around security and regulatory oversight, they are critical for building broader trust and ensuring the long-term viability of this whole space. A truly significant incident recently involved over $90 million being reported stolen from Iran's Nobitex exchange.
90 million.
Yeah, and what made this particularly alarming was a pro-Israel hacker group claiming credit for not just stealing, but actually burning the funds, meaning they were sent to an unrecoverable address. So this wasn't just a theft, it was a targeted act of digital destruction. It highlights the persistent and often politically motivated threat of cyber attacks in the crypto world. A stark reminder that even with sophisticated security, exchanges remain prime targets.
That's a really chilling example of the threats out there. Beyond the hacks themselves, what about the legal landscape? Are authorities cracking down more on illicit activities, and how are crypto firms responding to this increased scrutiny?
Absolutely. The legal landscape is incredibly active. Authorities are definitely stepping up their efforts against illicit activities. The Department of Justice, for instance, is actively pursuing large-scale fraud. They're seeking forfeiture of a staggering $225 million tied to widespread crypto pig butchering scams.
Pig butchering. Remind us what that entails. It sounds awful.
It is awful.
Yeah.
These aren't just your average phishing attempts. Pig butchering scams are unique because they play a long game. The fraudsters build deep, sometimes even romantic or friendship-based relationships with victims over months. They gain their trust before eventually luring them into fake crypto investment platforms. It's this calculated psychological manipulation that exploits human connection, that makes them particularly insidious and just devastating for the victims involved.
Truly disturbing. And on the regulatory side, you mentioned friction.
Yes, on the regulatory enforcement side, we are seeing increasing friction. Gemini, the crypto exchange founded by the Winklevoss twins, they've actually filed a formal complaint against the Commodity Futures Trading Commission, the CFTC. They're calling a 7-year probe into their activities baseless. This really underscores the ongoing tensions and, frankly, legal battles between established crypto firms and powerful regulators. It's this constant dance, isn't it, between innovation and enforcement, where each side is trying to define the rules of the road as they go.
It really does sound like a high-stakes dance. Are there any other notable incidents or shifts maybe in the physical world of crypto, like the foundational mining operations? Does that tie into these broader themes of risk and evolving landscapes?
Yes, absolutely. In the physical realm of crypto, we're seeing continued actions against illegal crypto mining operations, like a large farm that was recently shut down on state land in Russia. These operations often consume vast amounts of energy, right? They put a strain on local grids, raise environmental concerns, and that leads to these crackdowns. And interestingly, on the flip side, we're observing some fascinating shifts in the global distribution of mining power. There are strong reports of major Chinese Bitcoin mining hardware giants setting up significant manufacturing hubs right here in the U.S.
Oh, interesting.
Yeah, it raises critical questions, doesn't it? About potential supply chain risks, the decentralization of mining power, and the evolving geopolitical landscape of where crypto is literally made.
Hmm.
It's clear that while security and compliance are paramount, they're also constantly being challenged and adapted to.
Okay, so shifting our gaze a bit from the current state and recent headlines, what are the market analysts saying about future price movements for the major assets specifically? And kind of alongside that, what fascinating new trends are emerging in the broader crypto ecosystem that might shape what's next?
Well, this raises an important question about market sentiment and innovation, and it's quite a dynamic picture, as always. For Bitcoin, some options data suggests a potential fall maybe under $100,000. And you see ongoing discussions, headlines, asking things like, why are Bitcoin and crypto prices down today? So that indicates some underlying concerns about short-term volatility or maybe just profit-taking. However, it's probably worth noting these are often short-term indicators within what looks like a larger, more resilient trend of institutional adoption we talked about.
Right, short-term versus long-term
Yeah,
signals.
exactly. Ethereum's price outlook, it shows a wider range of possibilities. Potential movements between $3,200 or maybe as low as $1,587. Its 39-day trading range seems to be nearing a significant breakout point, one way or the other. But despite this immediate uncertainty, our sources are really emphasizing why Ethereum should not be ignored amidst massive institutional capital inflows. End quote. That suggests underlying strength and its pivotal role in DeFi, the decentralized finance ecosystem, still position it for long-term growth, regardless of these short-term price swings.
So a bit of uncertainty maybe for the majors, but also that underlying strength seems key. What about other significant altcoins, like Solana or Polygon? They're big players too.
Solana, for its part, is reportedly holding key support, which basically means it's maintaining a price level that historically has prevented further declines.
Mm.
A breakout seems likely if the buyers step in with enough force. And we've also seen significant institutional backing for the Solana ecosystem. Line Group Holding announced a substantial $600 million facility for Hyperliquid Solana and Sui treasury strategy. That indicates real confidence in its growth potential and its tech.
Okay, so Solana looking potentially strong, but Polygon, you mentioned risk there.
Yes, Polygon's price is apparently at risk of a 25% plunge, which certainly sounds concerning on the surface. But even amidst these price concerns, the innovation continues. And what's fascinating here is that Polygon's co-founder is reviving zkEVM tech under a completely new venture called Zisk.
zkEVM, remind us why that's important.
Right, so for anyone tracking scaling solutions, zkEVM, zero-knowledge Ethereum virtual machine technology, it's seen as a potential game changer because it allows for incredibly high throughput, very low-cost transactions, all while maintaining the robust security of the main Ethereum network. So the revival and continued development of this tech under Zisk, it's a strong signal of persistent innovation. A long-term vision, despite any immediate market pressures, it really shows that the underlying tech development often just keeps going, regardless of the daily price charts.
That makes sense. Now, what's truly fascinating and often kind of baffling to outsiders is this ongoing meme coin phenomenon. It seems like a new one pops up every year, captures the collective internet imagination somehow. What are we seeing there now?
You're absolutely right. The meme coin space continues to evolve at just breakneck speed. And what's fascinating isn't just which meme coin is hot, but why they managed to capture lightning in a bottle, right? Shiba Inu exploded in 2021, leveraging community and social media buzz. Pepe tapped into internet culture and sort of niche humor in 2023. And now there's discussion about new contenders, like a frog token under 0002s that some claim could soar in 2025.
Another frog token.
Yeah. It highlights this growing trend of narrative-driven meme coins, often fueled more by viral trends and community engagement than any sort of fundamental utility. We're also seeing intense speculative bets on established meme coins like Dogecoin and Hedera, alongside newer, more obscure ones like NeoPepe Coin. There are even these highly charged debates reflecting kind of a blend of political commentary and pure speculation. These like Trump versus fart versus verse
Fart.
in apparently. And the ongoing battle for supremacy between future Pepe versus PPY of SHIB. It really highlights the highly speculative, community-driven, and often, let's be honest, chaotic nature of this niche, where cultural relevance and hype can briefly just outweigh any traditional market metrics. It's this unique blend of internet culture and finance.
A very unique blend indeed. And moving beyond just new tokens, what about the core infrastructure? Is there significant innovation happening in mining tech? Or how crypto intersects with other cutting-edge fields like AI?
Absolutely. Innovation in mining continues, constantly pushing boundaries for efficiency and increasingly sustainability. For example, Canada-based AgriForce is launching a Bitcoin mining site specifically powered by stranded gas.
Stranded gas.
Yeah, that's natural gas that would otherwise just be flared off or wasted at the source. So this offers a more eco-conscious and economically efficient approach to mining. HIVE blockchain CFO also highlighted hydro-cooled mining and AI cloud services as a significant edge they see post-halving. Hydro-cooling allows for more efficient energy use and denser computing power. And leveraging AI for cloud services shows how miners are looking beyond just transaction processing to new revenue streams and operational efficiencies.
And the AI connection specifically.
Right. The intersection of AI and crypto is becoming increasingly prominent. There are active discussions on using AI for crypto prediction, which basically aims to use machine learning to forecast market movements, offering a new layer of analytical tools. Could be powerful, could be hype. We'll see. But the sellout of Super AI Singapore 2025, a major conference, and Blockdown Festival launching an AI-led music experience, these are strong indicators that the synergy between these two transformative technologies is rapidly deepening. It could potentially unlock entirely new applications and industries within the crypto space. It feels like a really dynamic frontier right now.
Okay, so after this really comprehensive deep dive, what does this all mean for you, the curious learner, trying to navigate this incredibly dynamic space? How do we put all these pieces together into some kind of coherent understanding?
Well, this knowledge is definitely most valuable when you understand it and can apply it to your own perspective on the market. The confluence of all these events we've discussed, it highlights several critical takeaways, I think. Firstly, that increasing institutional embrace, powerfully evidenced by the Genius Act providing regulatory clarity and just the sheer scale of BlackRock's investments. It suggests a clear and accelerating move towards broader acceptance and potentially more regulated financial products down the line. This indicates crypto is indeed becoming less of a fringe asset and more integrated into global finance, shifting from maybe a niche interest to a more legitimate financial instrument.
But with that integration, does the risk just disappear, or does it simply change shape?
Not at all. In fact, understanding the risks becomes even more crucial, perhaps. The persistent presence of scams and exploits, like that Novitex exchange hack we mentioned, and the DOJ's aggressive actions against those sophisticated pig butchering scams. It serves as a stark reminder that diligence and robust security practices remain absolutely paramount for anyone participating in this market. The digital Wild West, it still has its dangers, and users have to be highly aware. Additionally, the inherent volatility of established assets like Bitcoin and Ethereum, alongside the highly speculative nature of meme coins, it truly underscores the incredibly diverse risk and reward profiles within crypto. It's not a monolith, right? Each asset class presents its own unique set of challenges and opportunities.
And looking ahead then, what's truly shaping the technological future of crypto beyond just the price movements day to day?
I think the continuous innovation in mining technology, moving towards more sustainable and efficient methods like using stranded gas and hydrocooling, along with that rapidly growing integration of AI we talked about, it hints at a profoundly evolving technological landscape within the industry. We're seeing more efficient ways to secure networks, to process transactions, and maybe even to predict market behavior. And ultimately, the emerging opinion that compliance as a catalyst, the idea that clearer, well-defined rules and regulatory frameworks aren't actually a hindrance, but could be the very force that paves the way for true mass adoption and the full maturation of this asset class. That could unlock its full potential for a global audience.
That was a truly insightful deep dive into the crypto world's latest developments. Really fascinating stuff. We've seen everything from institutional giants stepping in quite significantly to the wild ride of meme coins, as always, all while navigating these persistent security challenges and the constantly evolving regulatory shifts.
Indeed. And there's always more to learn, isn't there? So given this ongoing tension we see between the foundational ethos of decentralization and this growing push for regulation, The raw combined with the unpredictable nature of market sentiment and just sheer technological innovation, what role do you foresee individual engagement and maybe community-driven projects playing in shaping the next decade of digital assets? Especially as institutional involvement deepens and mainstream adoption perhaps becomes more of a reality.